What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 23rd of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we have got to talk about the continued strength over the past few weeks that we've seen in Bitcoin, as we've come yet again from this low range at the mid 50,000 range up here to the 200-day moving average, which so far has been acting as resistance. This is the opportune moment where the bulls can finally start taking charge. It is a moment I know many of you have been waiting for. I want to talk about some of the prerequisites of what we need to see, and along with that as well, where are some of the value opportunities in the altcoin space if we really are going to start taking off here. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. Now, as you guys know, we've been focusing for the last couple months on how price has generally been setting lower highs, lower lows. We've started to take long-term moving averages like the 100-day or the 200-day, these purple and blue lines on my chart, that started to act rather than support as resistance for price. And so far, that is still the case here. However, we yet again have an opportunity here, and I just want to echo here that it's got my attention. We haven't made any major moves yet, but we are at that point where the bulls have pushed price back up here again at that 200-day. We got above the 100-day moving average, and along that as well, we're well above the 21-day. Now, I don't expect that this has to break out today within 24 hours, but I want to make it clear that this is a period of time where we want to watch how price reacts. While a lot of people are going in blind, they're using thousands upon thousands of indicators, using various different inputs. For us here, we're really leaning in here to price and those key moving averages. The 200-day has absolutely high significance here. Not to mention, we're talking specifically about the simple moving average here, right? Which in my opinion is the most fundamental and important one here. It's taking the average of the last 200 days, and we're trying to see whether or not we can stop treating that as resistance and actually break out. Now, even if that does, it doesn't send the alarm bells that you have to go all in. What I'm saying here is that at a minimum, though, there's a good chance that Bitcoin could finally start to set in a higher high. We've already set in a higher low here from these two ranges, just to kind of draw it here on the chart. We had one here in August, and then along with that as well, here in September, we reclaimed the low from back here in July. So this is, in a sense, I don't want to say it's an inverse head and shoulders exactly, but you're seeing essentially a nice reversal pattern whereby we're able to start potentially trending higher here. That's the key goal here for the bulls, to really reclaim that after and essentially make this a big flag or kind of consolidation period, if you will. If we can actually get a nice weekly close above the prior high here from back in August, there's a chance that this could continue on for the next couple weeks. And that's further solidified by what's going on in stocks. We'll talk a little bit about that later on, but just wanted to echo that point here, that at a minimum, we could see some kind of return of confidence. If we take a look here at others' dominance, the next chart that I wanted to focus on, this is one of the most critical ones that you guys can keep your eye on, because at the end of the day, I'm not really looking to trade Bitcoin too much, if I'm being honest with you all. I think that there could be some returns to be made on Bitcoin. I think it's definitely good to get into Bitcoin when the momentum is there, rather than just hodling nowadays. I really don't think the risk reward is favorable here to just hodl long term, for like the next year or two, right? Especially at this kind of higher range. But the bigger thing I wanted to echo is that there's still always going to be opportunities in the altcoin sector when Bitcoin starts to move. And I want to echo here that it is very significant for me personally that for about a month and a half, we've been slowly but steadily creeping up here. And we're now coming up for the first time since we broke the 100-day as support back here in April. We sold our altcoin positions here in early April, and here in this period of time around April 12th, we had a breakdown significant below that 100-day, huge flush down the altcoin space. Now we've been able to finally build a base here. As you can see, we're starting to turn previous points of support, right, that we're treating as resistance. We're now getting back above those levels. And now that 100-day moving average is getting real close here. And to consider where we're at right now, right, we've obviously come down here to this long-term kind of line of support over the last 7 years in altcoins. Right? This is what we wrote about, for example, the dashboard. These are kind of insights that you guys can get that I don't think a lot of content creators are really covering. But I like to give you guys little drops here just to kind of show what you can expect if you sign up for the newsletter and the channel. We essentially We're expecting that if we didn't hold on this line of support here, we'd have a breakdown into this kind of golden accumulation range that we saw back in 2019 and 2017, where we could really see some interesting risk-taking opportunities as well. But outside of that as well, if we hold here, there's a chance for this to really have its broader acceleration. I don't know if we're really going to whipsaw like this, but I'm just saying overall that history has shown us that we usually have, at least according here to 2019, the first initial rally, the pullback down to the beginning, and then the whipsaw higher. So the idea here is that it generally, at least, we look like we're heading towards the 200-week moving average. If we just take a look here on the shorter term time frame. And when you keep it in perspective, we're below 10%. When we got out of altcoins, it was around 13% dominance. So this means that a whole range of plays here, not only has Bitcoin pulled back a good amount, it's not at all-time highs, but a lot of altcoins are really nicely discounted from their previous valuations when we were out of the market. So that's another important thing to keep in mind. Another way to visualize that is actual others market cap. The entirety of the altcoin space, minus the top 10 cryptocurrencies, is $213 or $214 billion at the time of recording. When we got out here again, it was around $325 billion. So again, we're talking about an altcoin space that's removed a lot of that fluff, a lot of the excess valuation, a lot of the froth in the market, and now we can really start to see which players are emerging. Right? And total market cap is still down, give or take, roughly speaking, if we would just put this at 2.15 million, right, or 2.15 trillion, right? We're coming close here to about $600 billion discount from that prior all-time high range. So that's really good here, that we've got some valuation acceleration that could play out here according to history. So what are some of those plays that I think you guys should keep on your radar? One of them is Stacks. Stacks against Bitcoin, obviously being Bitcoin infrastructure, with Bitcoin getting stronger, there's a chance that Stacks could play off of that. Stacks, as we've seen throughout history, moves through these kind of short-term cyclical moves that can really allow you to make some good multiples against Bitcoin. And from here on out, there's still that opportunity if we were to go to new highs, that this could go up anywhere from around 130 to 150% in regards to its acceleration from this point on. But generally from top to bottom, these are around 250% moves, right? Give or take. So I think that there's a chance you could see something similar to that here. Probably not as strong as, again, we're going higher and higher over time with these higher lows and higher highs, but just keep this as a kind of trade setup on your radar. I think Stacks is a really good play on the narrative of Bitcoin infrastructure because it really kind of owns this space. There aren't any other players that really come close to it. There are some other ones like Zeta Chain and a couple others, Mubi, some of those like smaller plays. But I really think this is the one that if you're looking for kind of consistency in the trend, this is one where you can kind of rotate, double your Bitcoin position, etc., and lock in profits. Next up is Render. As you guys know, I've talked a lot about Render over the past year. Render's been a play we've actually covered for a long time on the channel, but the key thing here that I like is the higher lows coming up to test that 100-day. If we get that breakaway above the 100-day, well, we still have the 200-day that could play as resistance here. This still gives, at least in the short term, some room for it to run up. And then if we can really, start to, as we've done in the past, clear through the chop of the 200-day, which I definitely can expect can play out, then you get your breakout moment, and that's just where you can hold it so long as really we're starting to use those long-term moving averages over the preceding months as support. Render, again, could accelerate higher like it has in the past. It all depends on how AI is going to play as a narrative, and so far, this to me looks like a healthy pullback, and it's a matter of what it does with those long-term moving averages here. Again, bring it here back to the weekly. I think the weekly is one of the best time frames to really view this here. And overall, there's a chance for this could go up higher to new highs if we continue to see that broader acceleration in Bitcoin getting back to new all-time highs. That's a big point I want to make and emphasize here before we continue diving into some of the altcoin plays, which is that we really want Bitcoin to get above the all-time highs before we start really making big bets in the altcoin space, right? It's very important to keep that in mind. Another play here as well that we wrote about in the Dash report for an accumulation play. It's one of the few that we really actually wrote about for the past couple months during this pullback. I really was hesitant to give many altcoin recommendations, and one of them that we recommended for an entry generally from around 18, things around here from like, I don't know if it's 18,000 or 1,800 sats, but you can see here on the chart, basically where I've got my cursor highlighted, this resistance point in the past, down here as well, to where some of the prices also found resistance in the previous past around 1,400. That was generally a range we recommended, and that was practically the bottom here for Fetch, being one of the leading AI plays. But we can see here we're up currently towards 2,600. So that's been one of the best performing mid caps in the entire market, right? And we're talking about mid caps, we're talking about plays that are easily, that basically I would say a couple $100 million to $2 to $3, $4 billion market cap range. And that has been one that's paid really well for some people who took the trade. Then the next thing is where could this go to, right? I've highlighted where that is in the dashboard, but generally speaking, we're utilizing a lot of historic ranges here to kind of play into that. I think this thing has got a lot of room to still go, so I would still consider it for a trade setup, even with the recent acceleration in price, because when Fetch starts to move, as you can see here, it can get moving for a while. And there might be some pullbacks along the way. You'll have a couple weeks of stagnation, but so long as that trend is holding up relatively well and it's holding on the key moving averages, that's good for me. Another one here that we haven't talked too much about is Tau. Now, BitTensor, or Tau for its token symbol, has been one of the emerging AI plays here in this cycle, and it's one that many people believe is more community oriented. If you look at the volume profile and stuff, it's not like a lot of the ones that go out there and promote tens and hundreds of millions of dollars in volume and stuff. The big thing overall here is that it had a really big breakout here over the last 2 weeks. And again, at the end of the day, I know a lot of people be like, oh, but wouldn't it be great to get it down here at the lows? Yeah, a lot of altcoins are still down in this kind of pocket of price. So you can't kick yourself in the head for I didn't get into it. What you need to do, though, is see which ones are performing best. Because the ones that are performing best not only already are setting themselves up to likely test the upper bound range. In this case, that's a 100% move from here for BitTensor against Bitcoin. So that's exciting for one. But outside of that as well, again, as on this narrative of buying strength, there's an opportunity for it to be able to clear through prior resistance. I don't want to say that that's a guarantee yet. I'm not going to say it's going to be an easy fight. It could very well be like over here, we get a pullback at that line of resistance. Those moving averages come up to support it. And sometime in 2025, we have a breakout up to there if altcoins remain confident and risk on assets are beneficial. I'm just saying here, at the end of the day, I like buying into strength. And I look here at the daily time frame, and so far, that's some good price action here. You have a lot of green days, 1 day of stagnation, pretty much neutral day, and then another 17% move. So something tells me here that there's a clear imbalance between supply and demand in the market, at least at current prices. Ordinals against Bitcoin, not too exciting just yet, but again, ordinals being in the Bitcoin infrastructure narrative, right? This is one to keep on your radar. We're very close to breaking that 100 day. The 200 day is not that far. As we've seen, when ordinal starts to move, it starts to move. So keep that in mind, keep it on your radar. Outside of that as well, there is also one other thing, again, that I want to echo, guys, which is that, we talk about a couple different narratives here. We talked about Bitcoin infrastructure. We talked about AI or deep pin related plays like Render. And outside of this one, we also talk about the narrative of, I think those are kind of the two big ones. We also will talk about meme coins later on. I usually talk about these kind of three emerging narratives in this cycle, right? So we have meme coins, we have Bitcoin infrastructure, we have deep pin or AI related plays, but there's also one that you always should definitely keep on your radar, and that's emerging L1 plays. Plays that could come to disrupt Ethereum, ones that could come to disrupt Solana, because these are some of the biggest altcoins here. It is one of the most consistent narratives in every single cycle. So I definitely recommend you guys keep an eye on some of the emerging plays here within the altcoin sector. And one of the plays that you should be keeping on your radar is our partner here in the channel, and that's none other than Zero. Now, Zero is one of the biggest projects on my radar when it comes to emerging L1s. It's up there with Radix and a couple other plays that could really start to disrupt the L1 space. For me personally, I like Zero because of its privacy-preserving technology using zero-knowledge proofs to be able to offer privacy-enhanced features for both its native protocol, which uses the framework of Cosmos, but along with it as well, its EVM-compatible network. So there's a couple big announcements I wanted to drop for you guys here that I think you should keep in mind when considering Zero as a project on your radar. The big thing above all is that right now there's a big token economics governance vote that's going on. There was no original solid structure around the token metrics for Al0, and this has been probably one of the project's biggest pain points. If I were to say anything, about things that I probably had issues with the project, and I'm very happy to see that the governance system is now finally in function and allowing for people to actually vote not only on the max supply, but the first year emission rate. This is going to be very imperative to understand the token economics of Al0, but also giving it a framework where it can still support itself as an ecosystem. Validators can get rewarded, of course, etc. So these are all important dynamics that are going on right now within the governance process, and there'll be more details as time progresses on all those governance votes. So definitely look into that. But beyond that as well, if you want to talk about a project that's really landing large corporate partnerships, you can't look any further than Al0. Al0 just launched their Neon program, which is an enterprise adoption program for the Al0 network. It helps to onboard new projects and companies into the space to build enterprise-grade applications. And they've got backing not only from carriers like T-Mobile, which have already been supporting the project for some time, but also Vodafone as well. So you've got a whole range of different companies who are starting to back the space, as well as names like Pearpoint and the Camera Foundation. You can read some more details into all of this, but it's basically going to give them dedicated managers or individuals who can help to support them in their endeavors in getting adapted into the Al0 ecosystem, as well as a whole range of things like workshops and focus groups that can help them to get onboarded and familiar with Al0's tech stack. And last but not least, there's also support for bridging A0, the native token, into the Al0 EVM ecosystem. Now again, I just want to make it clear here, this is probably one of the silent great announcements from the Al0 ecosystem that a lot of people probably missed. Essentially, there is now EVM compatible support on the Al0 network that's privacy preserving, and it's only going to get better over time. So essentially, if you think about the functionality of any kind of L1 or L2, Al0 EVM has it, and outside of this, well, they've got privacy preserving technologies, and now you can bridge your A0 onto the network. So this to me is really huge here. And existing applications out there in the world of DeFi that you want to make privacy preserving to allow for enterprises or traditional finance to come in, well, you can do that now. So this is really exciting stuff here. And I think there's a lot of opportunity to build in this ecosystem. So if you guys are interested in all these updates and maybe even checking into Al0 as an asset, this protocol, which is now finally starting to base out here as the token metric discussion is in play on the governance side, then definitely consider checking out the link down below in the description. It's not financial advice. I'm not telling you guys you have to go buy A0, but just keep it under radar. I think it's a cool project. It's one in which I'm definitely watching, and overall I think it's a good project from a fundamental standpoint, but especially I think long term, be a leader in the space as the market starts to pick up. Next up, I want to talk about meme coins, because this is obviously out of the kind of four narratives we talked about. This is one of them that I'm always really excited about. It's a momentum play. It was a huge spotlight when things really got euphoric towards the tail end of the run-up into Q1 of 2024. So a lot of people have been asking me again, Nick, what about meme coins? What about meme coins? Well, I have to tell you guys again, the point that I've been really echoing is to stay away from the large caps, because these large caps are going to be much more difficult. It's the same as Dogecoin. And I think people are going to realize it's the same here. We do not have the influx of retail traders. We do not have the influx of new capital and liquidity into the space. Maybe that changes. But even if it does change, I don't think it's going to be the biggest net benefit for Pepe or some of these larger ones. Pepe, for example, has been sideways here since August, still getting weighed down clearly by that 200-day. We can see WIF here as well. Same exact scenario, neutral since June. Kind of chopping with the 21-day here. No real consistency in the trend, slightly lower highs. Doesn't look good to me personally, but there are lots of small cap meme coins. There are lots of mid cap meme coins that are in that kind of couple $100 million range that could make that 5 or 10x move. Determining which of those plays is going to be the one early on is incredibly difficult. There are hundreds of thousands, if not millions, of meme coins, depending on what kind of filter you want to set. But even ones that have, $1 million to 2 million to 3 million in market cap and above, there's probably hundreds of thousands. So the big point I want to emphasize here is we have to give it more time. I would assume it's going to take a little while before we find out which meme coins are really going to start leading. And once those clear emergent players come, I'll be sure to let you guys know which ones we're watching. The other thing I want to talk about here is talking about the large caps, Solana and Ethereum. Now, while I want to make it clear that we're talking about watching for emerging layer 1 plays, I really don't think that betting on Ethereum or Solana are going to give you massive returns. Not to say that there can't be a good short-term trade setup. If Solana comes back up here to its general resistance range, that's a nice little 25%, 18%. Well, if you go, up here technically to the highs and stuff, 20, 30% up here in Solana. But the fact that we haven't gotten to the prior BTC highs and we've been stalling here for so long makes me really think that there's a lot of distribution going on. And to be fair, outside of meme coins, Solana is pretty much a dead chain in my opinion. But ETH is also very much in the same camp. Don't get me wrong. Not just trying to bash Solana here, even though there was a lot of insiders who benefited from it, and it kind of popped up overnight, and SBF and Alameda were pretty heavily involved in it. Of course, I don't need to go through that. You guys may agree with me, may disagree. So be it, that's fine. The main thing I wanted to talk about, though, is Ethereum is also down 56% against Bitcoin. And the only thing I'd say that favors Ethereum here is the fact that there are the ETFs, so some inflows could come from there, and it's down so much against Bitcoin. Those are really the only things. Otherwise, same fundamental scenario as Solana. Nothing really exciting going on in the DeFi ecosystem. I know that there's, for example, I think there's going to be the new project from Trump and stuff, where I think they're going to be using Aave and building their own front end. That doesn't really get me excited. It's not anything political or anything. I'm just saying I think if this is what we're getting excited about in crypto, we have completely lost the narrative on making DeFi mainstream. There is no new institutions coming in. There is no significant TVL increase in any of these protocols. There are no new flashy protocols or technology to begin with. So for me personally, I don't think that there's a foundation for Ethereum to ever get back up here against Bitcoin, but there is an opportunity for this to maybe go up to the 100-day or those long-term moving averages, and hey, that's not a bad trade right here. That's a good 15-16% against Bitcoin. You can probably use a little bit of leverage, 2% max or something, and two times 3x max, but overall, it doesn't really interest me that much. That's why I've kind of emphasized staying away. I know some people have asked me about, some of the equities around cryptos, like what about crypto miners, other plays in the space. I know CleanSpark has pulled back a good amount here. I know a lot of people are possibly looking to buy this one in a dip. While there can definitely be some good secondary rallies in these plays, which is why I would not negate them entirely, I think that perhaps, unless Bitcoin really goes to 100K and beyond, this is the high here for CleanSpark and a lot of miners and a lot of crypto-related equities. Nonetheless, as we pulled back to around $9 versus where we were at $24, that could mean that there could be some good short-term bumps. There's a gap that could get filled here at 1330. That's a great percentage return over that trading window, right? If this happens over the next couple months, 50% return. Outside of this, we've got TeraWolf, which is still holding strong here, but it's got that 200-week to play with that it needs to clear through. It's holding on the long-term moving averages, one of the stronger miners. And Riot as well, which has pulled back from $20 to $7. Again, even if this just comes up to test that 200-week again, even if it treats as resistance, that could be a doubling its valuation, right? Maybe we don't get that. Maybe we come up here to the 200-day. Still, might be a great rebound trade. And you can see within a matter of just a week, you can get these flash rallies from 782 to 1260, here from $9 to $13. Miners move really quick. And if Bitcoin starts having some really accelerated moves, these could be plays to watch as well. The only thing I'm going to tell you guys is on the long term with miners, it's the same as altcoins. I would not hold mining stocks long term. And the reason why is because there is a lot of extensive dilution in market cap. If you take a look here, many people would look and see that, hey, Riot back in October 2017 is pretty much where it is here today, 7 years later. But its market cap, it went from around $300 million up to nearly 10 times that at its current market cap range. And the reason for that is because it's constantly doing share dilution. These companies are losing money. And even in an environment where Bitcoin is trading up to 100K, I don't know how these companies are really going to sustain the heightened valuations that they get to, right? So it's just a big point here to keep in mind here with all of these mining stocks. Plays in which I would be a bit more interested in for a longer term hold into a broader altcoin cycle. You can definitely look at Coinbase, and Coinbase has had a nice pullback here. Had a nearly 50% pullback from 280 down here to 148. maybe this could trend back up higher. MicroStrategy as well, while it is still at a pretty good premium against Bitcoin, so long as it's holding on that 200-day and doesn't break below it, which would lead it down probably here to the 200-week or 100-month on a much broader Bitcoin pullback, then this thing could continue to charter higher and continue to keep up with Bitcoin or outpace. And there's, of course, DeFi technologies, which we've covered here on the channel before, once it would break out against that upper band range, right? I would really get interested for a broader altcoin cycle rally for this one. So, because they have a lot of the ETP products for various different crypto products. So we covered a lot of different plays in the crypto space. I hope you have some ideas on what you can put on your watch list, some of the kind of price ranges to look for, expectations. But the overarching narrative here, guys, is that if altcoins start to move, be happy if you can find some solid opportunities that look like they could double or maybe on the optimistic and triple your Bitcoin position. Don't think in 5, 10, 20 X's. Don't risk all your capital on one particular micro cap and wish for the best. You don't get many of these opportunities nowadays, and they're not going to be anywhere near as lucrative as they were in the past. But that doesn't mean a doubling or tripling of the capital that you put in, whether that's a fraction of your portfolio or if you're on the risk tail end, you're putting everything into crypto, doesn't mean that that's not phenomenal. Doesn't mean that that's not life-changing returns. If you have even, for example, just $5,000 in crypto or a couple $100 and you double or triple that, if you had a couple $100 before, a couple $1,000, or if you really have a sizable position, a couple 10,000, a couple 100,000 you're putting in crypto, and you double that, it doesn't matter where you're coming from the spectrum, that is still going to be life-changing, right? I hate how that gets knocked down by people that, you need a certain amount of money and stuff. Look, that could be enough to take the cash that you have to pay down a significant portion of your student loans, your auto loans, bring you much more financial freedom at the end of the day. So don't miss on these opportunities, guys. When they present themselves, you can take your action, but make sure, again, you don't get too greedy. You don't set expectations too high. Set them within reason. Lock in profits, and or build up your long-term equity or crypto portfolio and stuff. Whatever. Just rotate it into something that's going to at least be more stable. That's my general opinion here. It's not financial advice. That's what I've learned. That's helped me to really maintain wealth long-term. Is to not get caught in euphoria. Now, I wanted to go ahead and talk a little bit about equities. Right now, it's looking like the bulls are really in charge here. Volatility has really been crippled here. We had a significant lower high in volatility from around 65 points, one of the highest levels since back here during the pandemic. This was a huge kind of flash crash moment in equities. And then we had the low here in early September, around 23, 24 points. And once we really get down here and around below the 200-day, this is really your cue that we're clearly in the safe zone. I would say right now the bulls are in charge. Trend is good. It's favoring risk. We can see here again, if we're taking a look at the long-term channel here for the S&P 500 since 1929, I think we at a minimum are coming up here to 5,950 to 6,000 points, which means that this has got a couple more percentage points to probably go into the close of the year. And if you just take a look at the monthly here, it's green month, green month, green month, green month, green month. Each month moving up about anywhere from around 50 to around 150 points. So that generally means that we've got a couple more months here to go before we would hit that upper bound range. Not to mention we might have a red month along the way. We'll see. But I think that this is kind of the trajectory for the rest of the year is to kind of go up in this channel. And that can provide a buoy here where people start taking more risk in altcoins. Again, it doesn't mean we're going through some major altcoin cycle, right? Doesn't mean that we have to, for example, go to the upper bounds of this long-term channel we highlighted earlier, up to 25% market dominance. But it could mean we come back up here, or maybe we come up into the 200 week. And that alone is already a good set of trade setups we could possibly take, especially if we move a little bit earlier on it, right? So anyways, I just wanted to bring those to your attention, guys. Again, at the end of the day, money supply right now, or global M2, is slowly but steadily increasing. It's increased by about 2 trillion. And I know it sounds like a lot, but in percentage terms, that's not something incredibly significant, right, for global markets. Nonetheless, just taking a look here, we are still far from the longer term trajectory from back here pre-pandemic, and it looks like central banks are now feeling, after a period of stagnation, that they can get back to printing again, that they can get back to easier monetary policy. Interest rates are getting cut. This is all, at the end of the day, stimulatory for financial assets. Doesn't mean that we're ready to kick off a new bull market and completely smash through this line of resistance. That could happen. We're going to wait and see if it happens, if we get a nice close above that line of resistance. But for now, at least in the short term, there's a little bit more risk to be had until we really have the big question mark. Can we clear through this line? That's the big one. 6,000 points on the S&P 500. Can we really continue from that point on? Is AI really that big of a deal towards corporate productivity, earnings, etc.? We'll have to see. Anyways, guys, that was a long video, good ramble. I hope you enjoyed my rambling. If you did, consider dropping a like. It's one of the greatest ways you guys can support this channel. And outside of that as well, if you liked all the content we covered, you can always check out the dashboard down below. We've got some other tidbits and data, some trade setups that we cover. We just had our mid-month webinar back a couple of days ago. And along with that as well, we had our newsletter that came out. So you can sign up now, or you can sign up at the beginning of the month if you want to get the freshest edition. But that's it for today's video, everyone. Thank you all so much for watching, and I'll see you guys in the next video. Take care, everyone.